The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Everybody, this is the Tax Lady, and we're almost to the end, buddies. We're almost to the end, and that's what we're going to talk about. The end is coming, and we're going to give you some examples of some of the things you should not do when you're doing your taxes. And I'm going to tell you, with all the extra interest that people and dividends, they've done great in the market too. People are paying a lot more, and so that may blindside you. So we want to kind of prod you today to make you think about the end is coming, and we don't mean the world, we mean the end of tax season. And I have Chris Fabian here with me. Hey, Chris.
Hello, Esther. I was just thinking maybe we should put you by this road with the sandwich sign that says the end is coming.
Yeah, right. Anyway, we're here in Buffalo, New York. We have 32 area offices to serve you, open 9 to 9 Monday through Friday, 9 to 5 on Saturday. We have an office in Florida that listens to our radio show, WGUF Radio. Our office in Florida is at 1450 Airport Pulling Road, across the street from Tamiami Ford. But here in local New York, where it was just snowing, I couldn't believe it. But anyway, we want to talk about why you should care about getting your return filed on time. What's the biggest penalty you can get, Chris?
Not filing when you owe money.
It sounds counterproductive, doesn't it? Like, I owe money, why would I want to file? But the big penalty, 5% per month until it gets to 25%, in 5 months it gets to 25%, is for failure to file your return.
Right. And believe it or not, if you file May 1st, that's considered 2 months.
Yes.
Even though it's only 16 days, it's still considered 2 months because it's April and May.
Right. So so what happens is people think to themselves, okay, I owe this money. I don't have the money. So I will put this tax return in the bottom of my drawer, and when I save up enough money, I'll file the return. I have a situation where my cousin, her daughter had inherited a lot of money because the dad had passed away and left her with a large estate, and the mother couldn't think that she had enough money to pay for her daughter's tax liability, so she just waited. And so finally, the IRS kind of sent her a little love note that says, "Will you owe us $10,000?" And she says to me, "Esther, help! How can I owe $10,000?" Well, the truth was she owed like $7,000, but because it's now a year late or plus, the penalty and interest is accrued, and so now it's worse than ever. And that just happens. But here's the interesting thing: the little girl has $500,000. But the mother doesn't want to take it out of the bank account. How absurd is that?
Yeah. I mean,
we don't want to take it out of, but that's whose obligation it is. That's who's getting the interest on the account. And I just had a client today that said, I owe $8,000. Oh my gosh. And I said, well, you made $50,000 in extra interest and extra dividends. And he said, oh, I just hate it that I owe them. And I said, I get it that you hate it, but I'll tell you what I'll do. I'll pay the $8,000 in taxes. Just give me the interest. And he said, well, if you put it like that, because it's the truth. I mean, if you're making this money, then that money's in your account. You can go get it.
Right. And, a couple things. The people a couple years ago, what was the biggest complaint we heard? I'm not getting any interest. Now they're getting interest, and now they're complaining that they got to pay taxes. Well, what do you want? No interest, or do you want interest?
And the thing is, I'll say to to people, I'll say, "Oh, you did so good. Look at, oh, did you do good?" And then they're going, "Oh, this can't be good if Esther's saying it's good," because it is wonderful that people are doing well financially. That's what you really want, because doing your taxes, it's not how low your tax liability is; it's how much you have left after you pay your taxes and you do your investments, because paying zero taxes is not hard at all. You just don't make any money. You are as poor as a church mouse. You won't pay anything. But if you are somebody that's blessed with good brains and you're making a good income, then you're making income, and then your job is to tax plan to get it as low as you can legally. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 8030930. At 716-803-0930. I would love to hear what you have to say. I'm Esther Gullius, the tax lady from EG Tax. Okay, so...
I want another big penalty.
Yes?
And people won't, is how about losing your refund? Because what happens after 3 years?
You lose your refund.
Yeah, the IRS keeps your money.
Right.
So 2021
is closing April.
Closing April 15th.
Yep.
So if you haven't filed and you have money coming back,
you will lose it.
You will lose it.
Right.
And
that's
that year has to go paper this year. So get it done. You got to get it mailed and postmarked by the 15th so you get your money.
Right. And what Chris is saying is absolutely important for you to understand. You can't send a 2021 tax return electronically anymore. It's got to go paper, and you have to have the proof that you submitted that return before the 15th, or it's null and void and you lose that refund. Yep. And I can tell you there's tons of tax returns that aren't filed because they're kids that have W-2s, and the parents think, I don't feel like dealing with it. And okay, the kid might only get a $200 refund or $1,500 or $400 refund, but it's money that the kid is entitled to.
Right. It would be. I bet you we could look that up to see every year.
They always say
how much refunds die.
Right. So so if you owe money and you don't have the money to pay it, believe it or not, you want to file the return, because the failure to file your return penalty is the big one. Then what you can do is work with the federal government on getting that balance due paid. And some of the things you can do is you can put it on a charge card.
Right.
Which I don't recommend because you're going to pay 26% on the money. You can borrow from your pension and pay yourself back the interest. Right?
Yep.
To pay that liability. You can set up a payment program with the IRS, and I hate to say this, but they're wonderful about setting up a payment program.
Oh yeah, they're willing to go out some 6 or 7 years sometimes.
Right.
But remember, with that too, though, they do add the interest and penalties for not paying. So the sooner you can pay it off, the better it is.
But again, the big penalty is failure to file. The other thing you can do is sell some of your stocks or bonds, or take the money out of the interest-bearing account that you just made so much money on to pay that obligation.
Yep.
You can use your home equity to pay your tax liability.
Correct.
And right now, let's face it, we've got 3 weeks before the end of tax season, a little more. Now, if you need your home equity credit line, you want to apply as soon as possible, because it might take a while. And then the last one is borrow from family.
Yep.
But
hi, Mom. Hi, Dad. I'm here for dinner. By the way.
All right, let's go to John, who's been waiting. Hey, John, how can we help you?
Yes. Good afternoon. My name is John. I'm calling regarding an estate, a 1041. Recently, I received a letter from the IRS stating, that I have to file a 1041 for my late mother, passed in May of last year. And my query was, being that the 403B and the IRA was transferred privately, and the bank accounts were POD, and they were transferred, privately. The only asset that was transferred publicly in the will was the house, and I read that $600 in income is the threshold for the estate to generate, where one must file a 1041 versus 1040. I filed the 1040 for her, of course, but my question is, why am I getting a letter? I called them, I asked them, and I explained to them just what I explained to you, and they couldn't give me a definitive answer.
Okay, well, first of all, and I think it can be very confusing. There's a 1041 that has to be filed for the estate of a person. Then there's also a 1041, which is a fiduciary return, which is the money that is left in a former person's assets before they distribute. Okay, and that's called a fiduciary. That's also a 1041. So the 1041 for your mother might have to be done because there's still money that was made upon her death with her assets before they were transferred out of her estate.
The only assets that were there were the bank accounts. It was interest, and they were transferred within a matter of a week. POD.
Right.
So I don't know how much interest they could have generated in 7 or 8 days.
John, this letter from the IRS, does it say, here is your EIN number for the estate of mom?
Yeah,
and
there is an EIN with the attorney. When they transferred the house, the attorney applied for the EIN.
Right. So
number,
all this letter
for the property. Yeah.
All this letter is giving you the tax ID number so you could go open up a bank account, okay? And then if there is more income, the $600, then you need to file by that due date on that letter.
But if John, there's not enough money, then you can just ignore the letter.
No, that's my point. Yeah, there is no income that was generated by the estate.
Then go have a coffee and a donut. You're good to go.
No, and I mean, I don't know. I mean, I don't want to get in a situation
just to make
where,
yourself feel better. You might just want to do the 1041 with the $12 on it and submit it. Then you're done.
Yeah, that's what I plan on doing. Just
Right,
exactly.
There you go. Well, see, that'll ease your conscience.
Make them happy. Walk the walk.
That'll make you happy, John, and everybody's happy.
Yeah, I mean that's the way I see it. I just
But you really, if there really isn't $600 in income, and there's no sales of stock or any assets that would before she it transferred out of her name, then you can actually just ignore it.
Yeah, I mean there's nothing there, absolutely nothing. So
all right, sounds like a plan.
All the way down. All right.
That's
John. All I have.
Have a donut on me.
All right. Likewise.
All right, I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side. Hey, to us, you are family. I really want people to feel like, we are like family. And even if you have strayed and you've gone someplace else, you can always give us a call. And you can go to our website at egtax.com. Ask the tax lady. I'm thrilled to answer the tax questions.
Are you saying there's prodigal taxpayers?
There must be. Must be. Okay. So with many people find out that the refund is smaller or they have a bigger balance due than ever before, they can get money by just going to the bank and getting the money out. And how many times have you had taxpayers say to you, but I never took the money out, why should it be taxed?
Right.
Right?
Yep. I didn't take it, I just reinvested it.
Right.
Or they just, they're increasing your basis.
Right. And here's the thing, it's called constructive receipt. If you have the ability to go take the money out, and nobody's going to say, no, you can't have that money, then you've received it. And so leaving it in there just means that you're saving more.
Right.
But it is taxable. So, you got to watch that. And don't ignore the tax deadline. April 15th is approaching. Hey, it's just 3 weeks away. Right?
Yay.
Isn't it 3 weeks away? especially if you owe money. So, and get the return filed. And so people go, well, then I just send it in without money? Yes, because guess what they will do?
Send you a bill.
They will bill you. They're so nice. They will send you a bill, right? So, and just waiting to save the taxes is the worst thing you can do, because the failure to file penalty, failure to pay penalty, and interest on the whole ball of wax is astronomical. Eliminating that one penalty, failure to file, is something you really got to think about. And here it is, a cold weekend, unless you're in Florida. Here you are, a cold weekend. You may as well get your stuff together,
Yeah.
right?
Get it together, get it organized.
And then what do you do if you find out that you do owe money for next year? Nothing. You do nothing, right?
Sure. No, I mean, well, you do your tax planning and you make the adjustments now so you don't get hit with the big balance due again next year.
How many clients will say to you, well, I'm just going to save it up because I'm going to just give them, I'm saving it up myself and I'll pay them all at once. And then I say, well, then they penalize you. The people are flabbergasted. They don't realize it's a pay-as-you-go system, and if you don't pay as you earn the money, then they penalize you. There's a couple of exceptions, and then they penalize you for failure to timely make payments.
Right.
And so that's
right.
why you want to go and deal with your balance due.
Yes, and I know some people say, well, especially now interest rates are dropping a little and they're staying flat now, but people are saying, well, I'm still making more money than they're penalizing me, so I think I'm okay with this. Well, you got to make sure you're disciplined.
Right.
Because there are a lot of people out there who are not disciplined.
And then you get behind the 8 ball.
Yep.
Like a client that I saw the other day, he came in 2021. We did a tax return for him, and he owed about $20,000, and he didn't have the money, and he just came in now in 2025, got a love letter from the federal government that says he owed like $70,000. Well, come to find out, when we looked at the transcript that they had sent him, he had more self-employment income that he had divulged to us originally. And so when we questioned him, he said, well, I thought that they would never know. And so when you're doing these things, you have to understand that if you got the piece of paper, the IRS got the piece of paper.
Yep.
Stating how much the income is.
Yes.
So you want to make sure. And the other thing is, if you find out you owe money, there are things that you can do right now to reduce your tax liability.
Right. You got 24 days left to do it.
Right. So you can put money, if you have wages or self-employment, you can put money into a traditional IRA, or if you're self-employed, into a simplified employee pension, and that will save you money.
Right. It could save you 25%
of your liability.
Right. So.
And the other thing is, double check your return. Make sure that you've taken every deduction that you possibly can, like student loan interest. If you're paying student loan interest, like we just talked about the 401, the IRAs or the SEPs. Those are things that you can do to create a deduction now. People may not know about the earned income credit. If you're between the ages of 25 and 65 and your income's relatively low, even if you don't have children, you can get money given to you that you didn't pay into.
Right. I know you mentioned student loans. I had a young lady the other night, and we're doing a return, and she owed money, and I'm like, you sure you don't have student loans? Well, it's not going to be much. I said, do me a favor, look on your phone, grab it, let me know. And she ended up getting $300 back instead of owing $100.
Right. And to me, that $400 swing, that pays for our fee for 3-4 years,
Yep.
And so that's what's really important, is that you get every dollar that you're entitled to. And cumulatively, it adds up, a little here, a little there, a little everywhere.
Yes.
Right?
For sure.
The other thing is, many self-employed people don't know that they can take, as an adjustment, the money that they pay for their health insurance, even if it's through Medicare.
Right.
And that is a direct adjustment on your tax return without making it a medical expense. And so you get the full bang for your buck. The other thing is, and we talk about this a lot, is don't forget if you've done a charitable rollover to indicate that when you're doing your tax return and you're reporting the pensions. Because if you just blindly put it into the computer, the 1099-R, with letting the computer know that that was a charitable rollover, you're not going to get any benefit for it.
Yes. You would think they would come up with a new code.
You would think, wouldn't you? Didn't they used to have a code?
For charity.
I thought there was.
Well, that was to do it, put it in where you put money in, but you put it in an annuity for the charity, but you get the income from it or something. The code F.
Yeah. Okay. Well. Okay. And then the other thing is you can also do an HSA.
Yes.
So who qualifies for the HSA, Chris?
Anybody that has a high deductible health insurance plan.
Like, for instance, let's say you're married to an old guy, he's 65, and he's on Medicare, right? And you are 55, he robbed the cradle, and you have health insurance that you're paying for yourself, right?
Yep.
Well, you could qualify for the HSA, which would be another, it works a lot like the IRA, and it's an adjustment to income, and that'll save you money too,
Correct.
right?
Yep.
All right. Let's see, what else? Oh, well, I'll just say my name again. I'm Esther Golios, the tax lady from EG Tax. All of our offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. We are closed on Sunday except for the McKinley Mall. And if you have any tax questions, you can go to our website at egtax.com, ask the tax lady, and we'll be happy to help you. We're going to break for news. We'll be back on the other side.
We are family. I got all my sisters.
Hey, to us, you are family. I'm Esther Golios, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And if you're in Florida, you can just go to our website, ask the tax lady, and we'll play it on a future show. Right? Okay, so you owe money, you can't pay. You might be a candidate for an offer and compromise. And this is really important because it's a lot of times on commercials they'll say it's the Fresh Start Initiative. It's really the offer and compromise. But the offer and compromise can really save you a ton of money if you really are between a rock and a hard place.
Yes, definitely. And yeah, it is some work on your end. You have to get a lot of stuff.
to get rid of your debt.
But it's
worth
worth
a small price to pay.
because you could owe the IRS $40,000 and give them maybe $1,000.
Right.
And
If you're really unable to pay, let's say, God forbid, you have a tough medical situation and you took a bunch of money out of your IRA last year and, and that's why you owe the money, or you lost your job, or your wife left you with your best friend and she took the house and the babies and the kids. I mean, God knows what situation. But if you have the inability to pay, you can do an offer and compromise, and EG Tax will help you with that, right?
definitely. It's an application you got to fill out. There is an application fee, but if you're low income, they'll even waive that for
It's
you.
true. They just
So-
want to get you on the straight and narrow
Correct. Yes.
because they want to get you back as a contributing member to society. It's got to be really depressing to see that you're getting all those threatening letters.
Right. And I know, like, Tiffany, she's the person here who does our offer and compromises. She actually first will look at the returns that caused it.
And which is such a great thing, because sometimes you look at the return that caused the balance due and you find out that it was done incorrectly. And so you just do an amended return and you fix it and you get rid of the liability that way.
Yep.
I know there's people listening right now that are driving around and they know they owe the IRS money and they think there's nothing that can be done, but that's not true.
right? There's always something. And if you ignore it, they will go in and seize your bank
They will,
accounts.
they
They will
will.
put a lien on your house.
They will really make it.
They
tough on you.
even go after Social Security now
Yep,
to
they
collect
will.
their money.
That's true. All right, let's go back to the phones. We're going to talk to Dave. Hi, Dave. How can we help you, sir?
Hello, everyone. You mentioned recently that the IRS will take your credit card for your tax responsibility.
Well, it's actually they have a deal set up with credit card companies, and yes, you can pay your liability with a credit card.
Well, I find with towns and cities that send you invoices, they want to charge you a service charge.
So does the IRS.
Yeah, I mean, I'm not saying that this is the way to do it. I'm
Oh,
saying this is a
okay.
way around it.
So what is it, 3%?
Something right
Something
around
like
there.
that, yeah.
But if you have a credit card that's a 0% right now, you know,
It's a deal.
and you get points,
Yep.
hey, it's a win-win.
Yeah, it's true. No, that's true. I'm not in that situation, but curious to find that out. And you could pay them
Right,
the
and see-
14th of
and
April, and you wouldn't get the bill till the 14th of May.
Exactly.
That's right, right. But I'm going to tell you, the last people there's two groups of people I don't want to owe. One is the federal government, and the other one is the state of New York, and maybe the state of New York before the federal government, because they can be tougher than the feds, don't you think, Chris?
Yep. Yes, for sure.
So yeah, so if you owe, we came up with some suggestions, and a lot of people have credit cards that they could put their balance on. It's better to owe a credit card than it is the IRS, because it's failure to file, failure to pay, and interest.
That's true. You can get a delayed interest on a new credit card a lot of times. Give you
Yep.
12 months, same as anything.
as-
But thank
right,
you. That
right.
cleared that up for
Okay,
me. Thank you.
you, Dave. Thanks for calling. I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. So, offers and compromise. So, what is it that somebody has to do? Because you mentioned that it's hard work. It really isn't hard work.
Well, it's you have to gather all your utility bills for 3 months, your credit card bills for 3 months, anybody you owe money to. You need 3 months worth of statements. You need 3 months of all your bank account statements and your pay stubs.
Well, you want to know what I find, though, with the difficulty with the offer and compromise? Sometimes people that are behind the 8 ball the reason they're behind the 8 ball is because they're kind of procrastinators.
Right.
And that's what makes it so difficult, because their personality type is such that this is hard for them to do the detail kind of stuff. But, you can call Niagara Mohawk, you can call National Fuel, you can call your credit card company, and they'll send them to you, your copies. And many times it's right online.
Yes, you can create accounts now and do everything that way.
All right, and so then and Tiffany will look at your assets. If you have assets, then it's a problem.
Right, including a 401k and IRA.
Right.
Those are assets that they look at as
Right.
well.
So if you have assets, they're going to say, pay the bill. If you have no assets and you just have liabilities, you would probably be a very good candidate for doing an offer and compromise.
Yes. Yep. Oh, yeah. And New York State does the same thing. They do the offer and compromises as well, so you can get both. I mean, also, like you said earlier, maybe you have a bad medical condition now. You might be in your income. You don't have income,
And
you might be able to come.
uncollectability,
Yep,
right?
to be classified as uncollectible, and so within 10 years, you may have to verify yourself the whole financial time for a couple times, and then they'll say, oh, your debt is forgiven.
Yep, after 10 years. That's true.
Yeah. So
So I
They
mean,
do help.
I guess I'm trying to encourage people with 3 weeks left of the tax season, get your stuff out, double check, make sure you don't owe. If you owe and you don't know what to do, you can call us. We'll be very happy to help you. If you have owed and keep owing, you need to change the way you're doing business, right? Because that means that you're just getting behind year after year after year. You're living beyond your means. And if you're not living behind your means because you really are having financial troubles, we should be able to get rid of that debt for you using the offer and compromise.
Correct.
So just want to help you. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. And let's see what else we got here. Oh, letters.
Yes, we get letters every day.
Those of you that remember Perry Como. Unfortunately, I remember Perry Como. I remember that whole darn jingle.
I remember the Como Mall.
We get letters. We get stacks and stacks of letters. 80 years ago, right? Anyway.
But yeah, if you get letters, don't ignore them.
Don't.
And don't
please.
just pay it. People, I understand why you call them heart attack letters.
Yeah.
I mean, you just, people panic when they see.
Well, sometimes you open it up and it was stock that you didn't claim, and it was a $100,000 stock transaction, and they give you a $20,000 bill. It does cause you to have a heart attack.
Right,
But
exactly.
not to us, so we look at what they're saying and we go, oh, it's just stock that wasn't claimed. Was this free stock, or was this stock that had a basis? Oh, it had a basis, and so you can fix it.
Right. Or you didn't claim your rent. There was a 1099 miss for rent. You didn't claim your rent. Well, then let's look at your expenses.
Right.
Let's look
and let's face it, the 1099K is going to be critical starting in 2025 as well.
Yep. Yeah, it's gonna $5,000 down to $600. That's and I've had people this year. Oh, this is a business I've had, but it's cash. Well, it's still reportable.
Right. Absolutely. And the other thing is, if you are getting phone calls from the IRS or the state of New York, and you have not already set up a what would you say, a meeting with them, and they're just saying, is this Esther Gilius? You have 20 minutes to give us some money, or we're going to seize your firstborn child. That's not the IRS or the state of New York. They will not call you unless you've already had an ongoing case with them. So if somebody calls out of the blue, that is a fake letter.
Right.
Which is getting harder. I was talking to Ben, our guy that does our IT work here, about how it's hard to decide what's real anymore.
Oh, it's incredible. I know. I think I said this a couple weeks ago, where I got a letter saying my email was hacked, and we'll give you a free year credit service, and all we need is your name, your date of birth, your social security number, your this and that. And I'm like, yeah, okay, but you never told me what email address I had that was hacked. So fraud. But I could see people going.
They can get in and get that information and know what your email address is on your business card, for crying out loud.
Yeah.
Right? What do we got to text?
We got a text. What are the drawbacks of a 529? If my kid chooses not to go to college or trade school, what happens to the funds in the account? We have aggressively funded this 529 for 17 years and are now concerned about the case where funds are not used by my children. Can this account be passed on to future grandkids? Yes.
Chris is really good at this.
Yes, they can be. So it's a great thing. Also, you can convert $8,000 a year to a Roth IRA, which is incredible.
Right.
So it's another.
In other
way,
words, if they're not going to be used for education.
if they're not going to be correct.
So.
Yeah. So you can always change the beneficiaries, and so there's a couple different options
so
for you.
529s, in case people don't know what a 529 plan is, it's the ability to put money aside and take a deduction on the state of New York to fund higher education for your beneficiaries in future years. And so it saves you money now, and the income that accrues completely tax-free if it's used for higher education.
Right. Well,
and
actually,
room and board.
actually now 529s can pay for grade school
That's true.
and high school.
That's true.
So
And so you think about that from a planning standpoint. saves you state tax money, and it grows completely tax free, and it can be used for funding something as unbelievable as nursery school, right?
Yep. Well, kindergarten and up.
Kindergarten and up,
Yep.
right?
Yep.
All right, I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back on the other side with your comments, questions, and calls. Thank you.
We are family. I got all my sisters with me. We are family.
I have the hardest time turning on my mic.
Get up, everybody.
I don't know. I guess I have micro disease. Disease. Anyway, 3 weeks and the jig is up for another year. I got to tell you, it was an interesting year. And for those of you that thought they weren't going to get refunds, the IRS has just not missed a beat, right?
Right? They're getting them out within a week.
Yep, it's unbelievable. All right, so we've had a lot of discussion in the last couple weeks over revocable and irrevocable, or as they say, revocable and irrevocable. I guess it's all where you put your accent. But
Tomato,
if
tomato.
you have a revocable or revocable trust, that means you really don't even have to do a 1041.
Right, because
right?
it's your
It goes
assets.
on your personal return,
Yes.
right?
Yep.
So if you have a family trust that's revocable, that means it can be changed and it goes on your personal return. If, however, it's irrevocable, then a lot of people were wondering whether you get a stepped-up basis, and Chris has been really pounding the pavement over this.
Right, right. So I've done research. I've called lawyers. And for an irrevocable trust to get the stepped-up basis, okay,
So you're leaving an asset.
you
Right.
have your house. You put the trust in an irrevocable trust to protect it from Medicaid. And then you pass away. The only way the beneficiaries get the stepped up basis is if the trust, the irrevocable trust, gives up the ownership and you claim the assets as on your 706 return, which is the return that says, I'm dead, here's how much I'm worth.
The estate return.
The estate return. So you're including that, same as stocks, if that's in your in your irrevocable trust. Anything, any assets.
And that's not
But-
such a big heavy lift, I'm going to tell you, because in order for you to have to pay taxes on your estate has to approach $14 million. Well, there's not that many people with an estate that's over $14 million. So if the
But-
house went through the
Right,
estate.
that estate. Right, but now this is my mind because now my mind's going other stuff. And I know people hate it when I do this to teachers or Esther or my wife, and I ask further questions. But the whole purpose is to help it not get Medicaid to take
Right,
it, right?
right.
So I guess the only people this would help would be people that never went on Medicaid.
right, because it's still an asset out there.
Right, because if Medicaid paid for nursing homes or other things and you put it back on their value, then Medicaid could take it, correct?
Well, that's what one would say,
Think,
but
but
like I said last week,
we're not lawyers.
for every law, there's an exception.
Yeah,
Just about. And it's the exceptions that really you got to know about. You know,
Yep.
the ignorance of the law is no excuse, but it also doesn't help you either, right?
right.
So if you have a revocable trust that just goes on your personal return, if it's irrevocable, then you file a form 1041. The question is, will the assets in your irrevocable trust get a stepped up basis? And that's what the IRS came out last year and said that it doesn't get a stepped up basis. And what we find out is it might if this caveats in your trust.
Yep.
All right, things that you need to do to reduce your 2025 taxes. It looks like energy conservation is going to stay in there. I haven't heard that anybody stating that they were
Right.
going to close that up. But understand, like for instance, the maximum you're going to get on a window or windows or a whole house of windows is $600
Per year.
per year.
Yep.
So you want to do, if you want to get 600, 600, 600, 600, then what you want to do is spread out that window replacement over a number of period of years, right?
Correct.
And the other thing is, if you're doing an HVAC system, a new stove, a new furnace, and central air, get the prices separated, because there's a full credit for the air conditioning and a full credit for the furnace.
Right.
So, because I've had clients, they say it was $12,000. Well, how much of it was for the air conditioning? I don't know. So we have to go back to them and find out how much the air conditioning was.
Right.
And you got to make sure that it's the highest efficiency.
Correct. Yes, yes. And I had somebody yesterday come in, and they're like, "Oh, we did this energy thing, and we're going to be so happy this year." And I'm like, "Okay, we're going to get $2,000 back because of what we did." I'm like, "Okay." Did the tax return, and their income basically was
Too low?
Social Security.
Oh, gosh.
So
Yeah.
they
And so the point is, if you're on Social Security and that's all you have no tax liability. And we can't give you a refund because you didn't pay anything in and you have no tax
right.
liability.
It's a non-refundable
Credit.
credit.
Right.
So if your income is low and your salesman is trying to tell you, call us before you sign the contract, and we'll tell you, because there's ways you can get that credit.
Right. In other words, if you went, let's say you've got an IRA and you have $100,000 in your IRA and you got this $1,200 or $2,000 credit coming, you might want to take $30,000 or $40,000 out of your IRA, and then that can be offset by your standard deduction and the balance by this non-refundable credit.
Correct.
And
Yep.
the cool thing is, I just said to somebody the other day, why don't you start? I said, if Social Security really passes that it's not going to be taxable next year, do you realize what will happen to people's tax returns?
Wow. Tremendous savings.
I mean, they can then many people can just empty out their IRAs
Yep.
tax-free,
Yep.
because if you have just eliminated $30,000 worth of potential tax liability, $3,000, you can take a lot of money out of your IRA for 401k. And then they said, well, why would we do that? Because our IRA is doing so good. I say, take it out and put it in what it is. Put
Right,
it in
change
same
the
vehicle.
investment tool.
But now it's free, and you don't ever have to pay taxes on it again, only on the growth.
Correct. Yep. Yep.
So, I mean, there's so many things you can do. And make sure you keep your ears to ask the tax lady, because as they change these laws, and they are going to change the laws, we will keep you abreast of all the changes so that you know what to do.
Right.
Like for instance, if they do make Social Security tax-free, and you're having withholding from your Social Security, but it's not going to be taxable next year, stop the withholding.
well, hopefully Social Security would stop that themselves.
One would
but
hope.
One would
never
hope.
knows.
But what about the no tax on overtime
And tips.
and tips?
Yeah,
I mean, that's the thing. But
I
again,
maybe start working for tips.
but again, that's federal for those. Social Security's tax free in
and
New York.
you know what New York State's going to do?
Right.
They're going to say, I don't care what the federal's doing. It's taxable
We
here."
want our money.
So that will be really, talk about something that would be
How about the
crazy.
bookkeeping for that?
Well, yeah, it'll fall to us, right? Because it'll just be crazy.
Yep.
Yep. They'd almost have to make the federal, when we're doing the inputting,
The W-2 one way.
as if it's going to be taxable in the federal, back it off, and then it goes over to the state.
Yeah.
So there's that, and then that expression: if you continue to do what you're doing, you're going to continue to get what you got.
Yep.
If you don't like what you're getting this year, then you should change. And we will sit down with you and come up with a plan, make some suggestions, and we love you even if you say, I'm not going to do it your way. That's great. But the thing is, you ought not. I had a guy yesterday that said, yeah, my HVAC guy was putting in the furnace and said, oh, do you know? And it was something really silly. And I said, no, that's not true. And he said, well, the guy really sounded like he knew something. I said, well, if you're getting your tax advice from the furnace guy,
Well,
not so good.
I had someone today go, I read somewhere online that if I have a car that was totally built, all the parts and everything were in the U.S., I can write off my car loan interest.
Oh, that's a good one.
I said, nope. He goes, I didn't think so, but I read that. So you got to be careful.
You really do.
You got to look at the source. You got to do follow-up.
Right. And the other, speaking of revocable and irrevocable trust, if you're somebody that is maybe the trustee of a trust, and there's income that the trust is generating, make sure you distribute that if the terms of the trust says they can be distributed, because you pay a lot lower interest rate than your trust will if it's making substantial income. So make sure you and the other trustees or beneficiaries distribute that before the end of the year so that you can get K-1s and they will go at the lower rate on your personal tax return. That's another thing you can do. But here's the thing. You got to change what you're doing. Like, for instance, are you in your pension plan at work?
Oh, wow.
How many times have we said that?
Yep. Because what else? I mean, not only are you saving for your future, but you could be passing up on free money.
Right, because your employer is matching.
Right.
So it's, it gets really
But-
frustrating because there are some wonderful things that can be done to reduce your overall tax liability that would really save you and your family money. And it's like selling your personal residence every 2 years. The gain up to $500,000, $250,000 if you're single, is tax free. I mean that's like one of the best deals in town
So don't unpack. Leave everything in the
for
boxes.
2 years. Especially here in Western New York, where the property rates went through the roof.
Yep.
Well, anyway, we have like almost 3 weeks before the end of this tax season. Get yourself busy so that you can get your taxes done as soon as possible, so that if you have a balance due, you're not surprised. If you need help, go to egtax.com. I'm Esther Gullius, the Tax Lady, with Chris Fabian. Thanks for listening.